All right. Starbucks has had a pretty choppy after-hours trading after reporting earnings. Ended down around 0.88% after hours, but overall through the trading day was up 1.22, so they were actually up for today. Nothing too crazy going on with this. So let's take a look at these earnings and see what's going on with Starbucks. How'd that earnings go, right? We had some concerns. Quarter two non-GAAP EPS of 32 cents in line, and a GAAP EPS of 28 cents, which is missed by, that's right, only 1 cent. Revenue of $6 billion, down 12% year over year, beat by 150 million. So this is a company that's been growing revenue pretty steadily, and obviously you have a pretty decent decline, 12% year over year, and it's a good amount. You think about it, there's a good reason for it. Their main growth business that they were super hyped about was China. And Chinese business was completely shut down for Starbucks. I mean, they had nothing they could do. All the stores were closed, and they're finally reopening. So that revenue hit, you can tell, is from that. Nothing unexpected with that. So we'll take a look here. With stores closed in Asia and Europe during this quarter, global comp sales fell 10% in fiscal quarter 2. Oh my gosh. Is that wild? 10% in quarter 2 here. Nearly matched the 9.7 consensus estimate, so a little bit further than that. Average ticket was up 4%. Transaction growth was down 13%. Not a shocker, less foot traffic, obviously, as people can't go. Some people want to go inside the store. Some people are okay with just going through the drive-thru. But others like me, I mean, I don't get Starbucks, but comp sales in the U.S. were down 3% during the quarter. Not bad, all things considered. I mean, we've had stay-at-home orders. Not bad. The company's our active memberships in Starbucks Reward U.S. increased 15% to 19.4 million, I would assume. During the quarter, they don't obviously tell me, but I think it's million, if I do remember correctly from last quarter. The company's consolidated operating margin sunk 660 basis points to 9.2% of sales. Starbucks opened 255 net new stores. That's crazy, to take its store count to 32,050 stores at the end of the quarter. Looking ahead, Starbucks says, based on the substantial experience in China to date, it continues to believe that the impact of the virus outbreak are temporary and that Starbucks business will recover fully over time. However, comp sales in China are expected to decline between 25 and 35% in the current quarter because, again, most of it's shut down right now. So you don't get too shocked about that. But obviously they're talking about quarter 3. You'll see recovery again. People will be right back in and out. I could see it. One other noteworthy piece of data, they kept their dividend at 41 cents right now, announcing a 41-cent dividend. Big stuff. So let's look at this financial results here. According to them, so global comp sales declined 10%, as we saw, but 4% increase in average ticket is big. We talked about net new stores. So GAAP EPS was 28 cents, down 47% from the prior year due to unfavorable impacts from the outbreak. No shocker. 19 million active members for the Rewards loyalty program. Very big stuff. So if you look obviously at these tables, definitely you saw growth last year for this quarter, but this quarter not really what you're expecting. Ticket price was actually showed growth in both, a little bit more growth this quarter actually, so pretty big in terms of average ticket growth. I like to see that. Obviously you see store growth. Revenues actually relatively unchanged, a little bit higher. Operating income down 27% though, which is a big hit. It's not unexpected at all. So nothing awful in terms of that. International segment, comp store sales growth down 31% this quarter. Change in transactions, 32% less transactions, so it matches up really entirely with that. Change in ticket was actually up 1% though. Okay, Store count increased 11% internationally. Revenues decreased 26%, and reported an operating loss actually of 15.4 million, which is crazy for them. Reporting a loss for sure. Definitely, you hate to see it. At the quarter end, though, you see we're talking about channel development segment. From the channel development segment, actually increased pretty well. So, Global Coffee Alliance, including additional product sales to Nestle in transition food service order fulfillment. Good stuff in terms of that. So for the guidance, obviously it's going to be rough to get guidance. But for China, they're expecting in quarter 3, which is this current quarter, down 25 to 35% in terms of revenue, or comp sales stores growth, I should say. Rough. Quarter 4, though, they're expecting negative 10% to flat. They're expecting 500 new stores in China, and channel development growth revenue decline of 6 to 8% with modest operating margin improvement. Capital expenditures of approximately 1.5 billion. So they can't really give a good estimate on sales right now. It's really hard to tell what's going to happen. It's super hard to tell. So other than that, we obviously always look at what we always look at, okay? That freaking balance sheet. That freaking balance sheet. That's what we love to see. Screw you and your nonsense here. So from the balance sheet perspective, we're comparing it to that was a good net crack. 6 months ago is what we're comparing it to right now. Cash and cash equivalents, right around 100 million less in terms of cash and cash equivalents this quarter. So that's a 6-month change. Nothing crazy. Total current assets are actually up because you see a change in prepaid expenses and other current assets. That category increased and accounts receivable increased. So 5.75 billion in terms of total current assets versus 5.6 billion is what they had previously 6 months ago. Overall in total assets, they've got 27.5 billion versus 19.2 billion 6 months ago. So massive growth there actually in terms of their total current assets, really just because of their operating lease. Bringing in $8 billion for that aspect. So big stuff. From the liabilities perspective, you see an actual decrease in accounts payable by around 200 million. Big stuff in terms of that. But overall total current liabilities actually rose 2 billion because you saw more short-term debt now and current portion of long-term debt having to be paid. So 8.2 billion in terms of current versus a 5.7 billion in terms of current assets. So liabilities are outweighing right now in terms of assets. Total liabilities of 35 billion do outweigh the 27 billion in current assets. And that's versus a 25 billion marker 6 months ago, I should say. So yikers. $10 billion increase in terms of total liabilities. Really all of it is this operating lease liability too, for the most part, as well as, just short-term debt included in there too, so makes sense. So the balance sheet's not lovely on this company, but I don't think it's too bad. I don't know. Starbucks is a company I like. Valuation on it, I think, is fair. I don't know what all we're going to see in terms of stock appreciation, actually. We're talking year to date. The stock's not hit too hard, down 12% year to date since their high points in February, down around 12 still. So the stock has recovered relatively well. It reached lows. We talk about 52-week close right around 50. I would love picking up the stock more for right around the 70 range if I could get it. I don't dislike it at all because obviously they're keeping their dividend. P/E ratio is fair on this company. It's going to decline, obviously, or really I guess it'll go up because they're going to have a loss in terms of profitability. But I like Starbucks stock. I just don't think right now it's necessarily the time to buy it. I think they got a lot of good stuff going on for the company, though, but I'd say wait at least a quarter to buy this company until we know for sure what things look like on the other side. But I think overall they're going to increase their online business and drive-through business because of this, and it's going to stay that way once we're done with it. So I really think that things are going to be good for Starbucks in the future, but I don't know if the shares are really going anywhere in the next month. Or the next 2 months, I should say, 2 to 3 months. So just keep an eye out for that. Alrighty.